Okay, thanks everyone. I think we're back, or the majority of us are back, so I'm going to get things kicked off and hopefully everyone returns shortly. So good morning, I'm Lisa Basido from the PCAOB's Office of the Chief Auditor. I'm joined here today by my colleague, Akiko Upchurch. Like you've heard before and will hear throughout the conference, I need to provide the disclaimer that though each of us appears today in our official capacity as PCAOB staff, the views expressed are the individual views of each speaker and do not necessarily reflect the views of the board, any individual board members, or other PCAOB staff. Today we're going to provide an overview of the activities of the Office of the Chief Auditor, which includes an update on our current standard setting agenda. In addition, we'll take a deeper look at the somewhat recently completed standard setting project on confirmation. And like you've heard and seen throughout as well, today we're going to have some of the CPE code checks throughout this session. So please do take note of those as they come up, the first one being 869. I'll give you a moment to take care of that. Okay, so that's 869. And now my colleague Akiko is going to start us off with an update on recent standard setting activities at the PCAOB.
Thank you, Lisa. The Office of Chief Auditor assists the board in establishing and maintaining the PCAOB standards, information about the standard setting process, as well as the board's agenda on standard setting, research, and rulemaking is made available to the public on the PCAOB's website. This is the starting point for users to find more in-depth information on both completed standard setting and rulemaking projects, and the projects that are currently underway, such as those projects with a proposal for public comment. In addition, when the PCAOB staff develops and publishes implementation guide for select standards and rules, those materials are made available here as well. Earlier this month, the board updated the standard setting, rulemaking, and research agenda. The standard setting project on the agendas are designated as either short-term or mid-term projects. Short-term standard projects are those that are being actively developed by the staff, where a board action, such as proposal adoption, is anticipated in fewer than 12 months. Mid-term standard setting projects are projects where the staff is actively engaged, but the board action is not anticipated in the next 12 months. In addition, there are several research projects on the agenda which focus on whether there is a need for changes to the PCAOB standards, and if so, the project will be added to the standard setting agenda. At the bottom of the slide is an example of information found on the standard setting page of our website. Clicking on the project name takes you to additional information about each project, including proposals, comment letters, and other related documents. Today, I would like to provide a high-level overview of the 2 projects that have recently been completed, so we encourage you all to visit corresponding project pages on our website and read the releases for further details. Last week, the board voted to approve 2 new standards. The first is an auditing standard, AS 1000, General Responsibilities of the Auditor in Conducting an Audit. The second is a new quality standard, QC 1000, Affirmed System of Quality Control. The SEC's approvals are currently pending for those 2 projects, the standards. The AS 1000 project stemmed from the board's effort to update the interim standards. Since the PCAOB adoption of interim standards in 2003, the auditing environment has evolved in many ways, including new PCAOB standards, new or revised independence requirements, and advancement in technology that have increased availability of electronic audit tools and use of audit software. ACE 1000 and the related amendments will modernize, clarify, and streamline the general principle and responsibility of auditors and provide a more logical presentation, which should enhance the usability of the standards. The new standard does not create any new principles of responsibility, but clarifies those that already exist. We are also clarifying the auditor's responsibility to evaluate whether the financial statements are presented fairly. Clarifying the engagement partner's due professional care responsibilities by adding specificity to certain audit performance principles set out in the standards, and accelerating the documentation completion date to assemble a complete and final set of audit documentation from the current requirement of 45 days to 14 days. The ACE 1000 rulemaking will replace 5 of our current standards and revise several other standards. ACE 1000 and amendments will take effect for audits of financial statements for fiscal years beginning or on or after December 15th, 2024, with an exception for the new documentation completion date. In response to the comments on the proposal, revisions were made in the adopting release to take a phased-in approach to provide firms that issue audit reports for 100 or less issuers with additional time to comply with the new documentation completion date, which means the effective date for the new 14-day documentation completion date will take effect for audits of financial statements for fiscal years beginning on or after December 15th, 2025. Also last week, the board adopted a new standard addressing a firm's system of quality control, QC 1000. Every step of this rulemaking was informed by extensive research and outreach, as well as by the PCAOB's inspections and enforcement activities. Our efforts included discussion with PCAOB advisory groups, issuance of concept release back in 2019, and releasing a proposal for public comment in 2022. A more extensive history of this project, including historical documents, comments received, can be found in the standard setting area of the website that I mentioned earlier. I will mention just a few aspects of the new standard. The new standard strikes a balance between a risk-based approach to QC and a set of mandates. Like other QM standard, QC 1000 is risk-based and inherently scalable. Firms should be able to proactively identify and manage the specific risk associated with their practice. All PCAOB registered firms will be required to design a QC system that complies with the new standard. Firms that perform audits of public companies or SEC-registered broker and dealers will be required to implement and operate the QC system they designed. The new standard contains provisions that address ongoing monitoring of the QC system and taking remedial actions where policy and procedures are not operating effectively. These firms will be required to annually evaluate their QC system and report the result of their evaluation to the PCAOB on a new Form QC. The firm's evaluation would be performed annually as of September 30 and the report to the PCAOB no later than November 30. As I mentioned earlier, The board considered scalability in the new standard, and there are several incremental requirements for firms with a larger PCAOB practice. Namely, there are firms that issue audit reports for more than 100 issuers per year. As one example, there will be an incremental requirements to establish an external oversight function for the QC system, referred to as EQCF, composed of one or more persons who can exercise judgment, independent judgment related to the firm's QC system. There are scalability considerations as well for the firms with a smaller PCAOB audit practice. Many firms perform only a small number of PCAOB engagement per year and subject to resource constraints that larger PCAOB practice do not face. We have addressed the particular needs of these firms in a number of ways, including providing a single individual may be assigned more than one of the QC system oversight roles required under the standard, and allowing the firms to issue 5 or fewer engagement reports for issuers or broker-dealers in a year to include audits not performed under PCAOB standards in some of their monitoring activities. Subject to the SEC approval, QC 1000 and related amendments will take effect on December 15, 2025. The initial evaluation of the QC system will be performed as of September 30, 2026, and initial reporting to the PCAOB on new Form QC by November 30, 2026. As you can see on the slide, currently the board has issued 3 standard setting and 3 rulemaking proposals. I will briefly describe our newest proposal, Firm and Engagement Matrix. In April, the board issued a proposal on a Firm and Engagement Matrix, which requires certain firms that meet the proposed reporting threshold to report the matrix at both firm level and engagement level in 11 areas. In terms of the proposed reporting threshold, firm level reporting would be required for every firm during that reporting period, audits at least one accelerated filer or large accelerated filer, as those terms are defined in SEC rules. The determination of whether a firm was required to provide firm-level reporting would be made every 12 months as of September 30, and the firm would be reported to the PCAOB on the new Form FM. Engagement level reporting would be required for every audit of an accelerated or large accelerated filer, and it would be reported to the PCAOB on a revised Form AP. Firms that did not meet the threshold required firm level or engagement level reporting, so those are the firms that do not audit any large accelerated filer or accelerated filer, would not be required to report a matrix, but could choose to report so voluntarily. The comment period for this proposal is open through June 7, 2024. And for the CPA code, it's 575. Again, it's 575. And now I will turn the presentation over to Lisa, who will discuss the new confirmation standard.
Okay, what you're all waiting for. Okay, in September 2023, the board adopted a new auditing standard, AS 2310, the auditor's use of confirmation. AS 2310 was approved by the SEC last December. The new standard will replace an existing standard on the confirmation process that was written over 30 years ago and which had minimal amendments since it became one of the PCAOB's interim standards back in 2003. a standard on confirmation is important for audit quality and investor protection, as the confirmation process touches nearly every audit. Information obtained by the auditor from knowledgeable external sources can be an important source of evidence obtained as part of an audit of a company's financial statements. The new standard more expressly integrates the PCAOB's risk assessment standards by incorporating certain risk-based considerations and emphasizing the auditor's responsibilities for obtaining relevant and reliable audit evidence through the confirmation process. The new standard updates existing standards to reflect developments in practice as well, such as the use of electronic forms of communication between an auditor and a confirming party, and audit techniques that enable the auditor to obtain relevant and reliable audit evidence by directly accessing information maintained by a knowledgeable external source. Lastly, the new standard strengthens the PCAOB's requirements in certain areas, such as when confirming cash and accounts receivable, to focus on the need to obtain that reliable audit evidence when executing the confirmation process. This new standard is effective for audits of financial statements for fiscal years ending on or after June 15th, 2025. Like the current standard about confirmation, the new standard addresses how the auditor performs confirmation procedures, but it doesn't address how much or how many confirmations. For instance, the new standard does not contain requirements regarding nature, timing, or extent of audit procedures, including confirmation procedures. AS 2301, the auditor's responses to the risks of material misstatement, was not amended in any way by the new confirmation standard. Also, the new standard does not amend AS 2315 on audit sampling regarding planning, performing, and evaluating audit samples. So it's likely that the extent of the auditor's confirmation procedures are going to depend on the auditor's risk assessment and materiality, which shouldn't be really different than what the auditor is doing today. Now, there are a lot of provisions included in this new standard. Today, I'm only going to cover a handful of topics that are noted here on this slide. We'll do this through a series of short examples about these topics. Of course, though, it's important to read and apply the new standard in its entirety. First, I'll talk about the confirming parties, and specifically the requirement in the new standard in paragraph 9, which states that the auditor should direct confirmation requests to confirming parties, individuals, or organizations who are knowledgeable about the information to be confirmed and determine the confirmation requests are properly addressed. The point of this provision is that the confirmation requests reach that knowledgeable third party, which can be an individual or organization, as I've just stated, who then provides the required information back to the auditor. Now, the new standard does not prescribe the nature or extent of procedures to be performed by the auditor when making the determination that confirmation requests are properly addressed. Rather, the auditor can tailor the procedures to the facts and circumstances of the audit. With that said, I'll discuss some procedures the auditor might perform in practice as part of determining that confirmation requests are properly addressed. First, some auditors compare some or all confirming party addresses, which are typically provided to them by the company, to physical addresses or email domains included in the confirming party's website. When an auditor uses an intermediary to facilitate direct electronic transmission of confirmation requests and to receive responses, the new standard requires that the auditor evaluates the implications on the reliability of the confirmation process. There's an Appendix B of the new standard which discusses procedures the auditor should perform regarding the intermediary's controls that address the risk of interception and alteration of a confirmation. The auditor may determine that relevant controls at the intermediary also include controls about validating addresses of confirming parties. And in such a situation, the auditor may be able to determine that the audit procedures performed in accordance with this new Appendix B of the standard are also sufficient to determine that confirmation requests are properly addressed. However, in situations where the auditor determines the intermediary's controls that address the risk of interception and alteration do not also include controls about validating addresses of the confirming party, the auditor would need to perform other procedures to comply with the requirements of the new standard. I'll now move on to discussing the use of negative confirmations. Now, just as a reminder, which we probably all know, a negative confirmation request is one where the auditor requests a response of the confirming party only if that confirming party disagrees with information provided in the request. The new standard makes it clear that negative confirmation requests cannot be the sole substantive procedure for addressing the risk of material misstatement to a financial statement assertion. Specifically, paragraph 12 of new AS 2310 states that the use of negative confirmation requests alone does not provide sufficient appropriate audit evidence. However, as noted in the next paragraph 13 of the new standard, there are situations in which the use of negative confirmation requests in combination with the performance of other substantive audit procedures may provide sufficient appropriate audit evidence. And here is noted the examples that are also in the new standard. Those are when the auditor has assessed the risk of material misstatement for the relevant assertions as low and obtained sufficient appropriate audit evidence regarding the design and operating effectiveness of controls. Or when the population of items within the account balance or class of transactions for which the auditor considers sending negative confirmation requests is composed of many small, homogeneous items. Or when the auditor expects a low exception rate in response to negative confirmation requests and has a reasonable basis for this expectation. Now, the new standard does not include examples of other substantive procedures that may or should be used in conjunction with negative confirmation requests. We felt that including examples in the new standard could be misperceived as establishing some sort of formal checklist, whereas really it's the nature, timing, and extent of audit procedures that provide sufficient appropriate audit evidence is going to really depend on facts and circumstances in each audit. And to give you a mental break, we have another CPE code that's come up. If you can all take note of number 638. Hopefully that works for you. 638. Okay. I'm going to move on to another section of the confirmation standard. The new standard has specific considerations for cash, accounts receivable, as well as confirming terms of certain transactions. Today, I'm going to focus on the provisions that address confirming cash and cash equivalents held by third parties, which I'll just refer to as cash from here on, and confirming accounts receivable. The requirement for the auditor to confirm cash is actually a new requirement. While it's really been a typical procedure done by many auditors over the years, there wasn't a specific requirement to do so in our auditing standards before. The standard carries forward an existing requirement to confirm accounts receivable. Accounts receivable in the new standard include receivables that arise from the transfer of goods or services to a customer, or a financial institution's loans. For both cash and accounts receivable, there is a presumption in the new standard that the auditor should obtain audit evidence from a knowledgeable external source, either by performing confirmation procedures or using other means to obtain audit evidence by directly accessing information maintained by the knowledgeable external source. The adopting release for the confirmation standard describes that a knowledgeable external source generally is going to be a third party who the auditor believes has knowledge of the information that may be used as audit evidence. Regarding directly accessing information maintained by a knowledgeable external source, We believe that if the auditor is able to perform other procedures that allow the auditor to obtain this evidence directly, this audit evidence would be at least as persuasive as audit evidence obtained through confirmation procedures. I'll focus first on cash and some examples here. The basic one here, which most of us have come across very regularly, is where the company has cash balances deposited with a financial institution. And I just want to step through a couple of examples of substantive audit procedures that could satisfy paragraph 24, the requirement that I just spoke about. The first, and probably most typical, is the auditor sending a confirmation request and receiving a confirmation response directly from the financial institution. Now, the auditor can do this by various means, including email or a physically mailed confirmation request and response. Second, and also typical, is where a financial institution may instruct external auditors to send confirmation requests using a confirmation intermediary. So for this example, let's assume the auditor has evaluated the implications of using an intermediary on the reliability of the confirmation process and was satisfied with the results of those procedures. Then the auditor uses that confirmation intermediary to facilitate direct electronic transmission of confirmation requests and responses. And then the third example, rather than a confirmation procedure, the auditor is able to obtain read-only access to information maintained by the financial institution about the company's cash balances. In this example, directly through a secure website using credentials furnished to the auditor by the financial institution. The new standard specifies situations in which alternative procedures should be performed by the auditor, such as in the case of a non-response to a confirmation request, and includes examples of alternative procedures. Let's look at an example of an alternative procedure relating to cash that could satisfy the requirements which are in paragraph 23 of the new standard. In this example, the auditor sends a confirmation request to a financial institution. However, no response to the initial confirmation request was received, nor to a second request made by the auditor. As an alternative procedure, the auditor verifies the information about the company's cash balances by viewing information directly on a secure website of the financial institution. The auditor might verify such information by determining the validity of the financial institution's website and viewing that information directly on that website. The information viewed by the auditor might be accessed either by the auditor using login credentials provided by the company or accessed by company personnel with the auditor viewing them performing this task. Now, the new standard also addresses situations specifically for accounts receivable, where the auditor determines it's not feasible to obtain audit evidence through performing confirmation procedures. This determination is based on the auditor's experience, such as prior years' audit experience with the company, or similar engagements where the auditor didn't receive confirmation responses and expects a similar result again. In such cases, the auditor obtains information indirectly by performing other substantive procedures, including tests of details. The adopting release for the new standard explains that performing substantive analytical procedures would not be sufficient to overcome the presumption to confirm. Okay, let's talk about the kinds of substantive audit procedures that could satisfy the standard's requirement to obtain external information indirectly. So in this situation, the auditor designs other substantive tests of details, which include obtaining external information indirectly. For accounts receivable, the auditor may be able to satisfy this requirement by obtaining information that's in the company's possession that the company received from one or more knowledgeable external sources. Hence, that's what I mean by indirectly. The auditor obtains that external information, but it's information that's in the company's possession. Example procedure, there are example procedures in this slide that I wanted to mention that might, depending on facts and circumstances, be used, including an examination of subsequent cash receipts, examination of shipping documents from third-party carriers, examination of customer purchase orders, or signed contracts. The nature, timing, and extent of procedures will be subject to specific facts and circumstances. Note that the auditor may determine it's necessary to perform more than one procedure to obtain the needed level of audit evidence. In addition, when the auditor, for accounts receivable, if the auditor determines it is not feasible to do the confirmation process, there are other considerations. When for cash or for accounts receivable, there's a significant risk associated with those accounts and the auditor does not do confirmation procedures, there's a new requirement for the auditor to communicate with the audit committee when they did not do confirmation procedures or otherwise obtain audit evidence by directly accessing information maintained by a knowledgeable external source. So in this instance, if the auditor determines it's not feasible to do confirmation of accounts receivable, the auditor would communicate that with the audit committee. And we have a final CPE code for this section, which is 297. Those were the prepared remarks that we had regarding confirmation and the standard setting agenda. We do have a little bit of time left over, and we'd be happy to take questions. I'm just going to read the ones that have come in so far, and then if others come in the meantime, we'll monitor this. Okay, so I'll read the first question, and Akiko, I don't know if you were prepared to answer or not, but this is asking specifically about firms auditing broker-dealers. What is the effective date and the ending dates of the first evaluation period for compliance with QC 1000, assuming it gets SEC approval as written, and the QC system annual report? So there's the new annual Form QC for firms that are auditing between 106 broker-dealers. I'm not fully picking up on that one about the 6 broker-dealers, but is that clear enough about the 100? Or?
Yeah, I think the question relates to the effective date, and I believe the QC 1000 only has one effective date. That's I may be confused, everybody. AS 1000 has that phrasing approach for the documentation completion side, but QC 1000 is the same, so I'll repeat what I said. The subject to the SEC's approval, QC 1000 and related amendments will take effect on December 15, 2025 meaning the initial evaluation of the QC system would be performed as of September 30, 2026. So that means the first year will be a shorter than 12 months period. Then the initial reporting to the PCAOB on a new Form QC will be November 30, 2026. And I hope I answered the question.
Yeah, and one thing I can elaborate just slightly further is, so there were certain scalability concessions, I don't know if that's the right word, but considerations for smaller firms. So I think in this example here, it's asking about 100 issuers and 6 broker-dealers. What the scalability consideration is about is for a firm that only has 5 or fewer issuers or broker-dealers in totality. There's a monitoring component that's required in the new QC 1000, and companies are required to do some monitoring procedures and to report on those. So if a company has less than 5, what the scalability consideration is that in your monitoring, you could also include the monitoring of engagements that are non-PCAOB ones and broker-dealers. That's so you're not picking on the same 3 engagements that the firm has year after year after year. You would be able to consider more than just those 5 or fewer in your monitoring activities that you have established. So hopefully that's on point with the question that was asked. Oh, okay, and thank you for clarifying. That was the question asked, is so that scalability is around, in totality, firms that have 5 or fewer issuers or broker-dealers, and what you can include, which of those engagements you could include in your monitoring procedures when you're reporting to the PCAOB in the Form QC each year. Okay. Let me just see, there's one other that came in. If you just give me a moment, please, to read through. Yeah, there's a fairly specific question being asked about a specific type of confirmation procedure. Let me just step back, and the whole point of doing confirmations is that the auditor is attempting to and hopefully obtaining information almost around the company, not relying on the company only, but going to that knowledgeable, whether it's individual or organization outside the company's records when they can, to verify information. I mean, that's why auditors do it in the first place. But the specific question is asking about bank statements and reviewing a bank statement. So, a bank statement that the company has in their possession and was sent to the company, is that obtaining information directly from that financial institution, that bank? I would say no, it's not. The whole point, as I just mentioned, is when you're obtaining that, you as the auditor are obtaining information without the involvement, so to speak, of the bank there to get that information and pass it on to you as the auditor. So that wasn't what was intended when we set the provision about directly. Directly would be that the auditor has a direct link, so to speak, a direct ability to communicate with the financial institution. In the example I mentioned, it was a secure website where the financial institution grants to the auditor some sort of credentials where they could get directly into that without relying on the company or getting information from the company. So what was being asked in this question here, that would be more of an indirectly or an alternative procedure when the auditor was not able to get a confirmation response or do some sort of direct access through a website to the financial institution. Okay. I don't think we have any more questions at this time, so probably me talking a bit fast, I think we have us a little bit of leeway before we have the next speaker come up. So we'll just do the transition and get ready with the next session from our Division of Enforcement and Investigations.